Remember the good old days when there used to be like 10
The good old
blockchains?
days. Yeah.
I remember there used to be like 3 blockchains, and now there's God knows how
There's
many
a lot.
thousands.
There's a lot. And so this is the blockchain wars we're in now, but we'll see what happens.
Hello, everybody. This is Mello and Sasha, your friends from Arcanum Ventures, back with another legendary, famous, super famous Wednesday 10-minute eye test. And this week, we're looking into a pretty interesting project. We're cheating a little bit because it's not exactly an IDO launch, but that's not in the rules, actually, so we're not cheating. Sasha, what are we looking at this week?
Well, we're looking at Celestia, a brand new modular blockchain network that launched, I think, just a couple of days ago. And so this seems to be creating a lot of hype on crypto Twitter and some other social media channels because they've got a big airdrop campaign that just launched. And so I'll go ahead and start the clock if you're ready. We'll dive into all this stuff that we can try and figure out about this project. But I guess first and foremost, we should decide, like, what angle are we taking on this from an investor perspective? Are we thinking about potentially looking at Celestia as an investment opportunity from purchasing, let's say, Celestia coins or tokens in the open market? I think that would be a good kind of viewpoint to take this from.
Yeah, and that's a little bit easier to do with an actual blockchain because it's probably one of the best use cases for a token is to help support a blockchain. So yeah, I think that's a good look. Like, if we're looking at it as a developer or somebody wants to build a startup, then we'd look at it a little bit differently. But yeah, we're investors, so we're going to put our investor hats on and we're going to see how much we could find out in 10 minutes. That's a lofty goal for an entire blockchain network, and I think we've done a few before, but it's not easy. But let's see how much we can get to. And
these are blockchains are usually the most difficult ones. But here we go, starting the clock now. All right, so we've got coin market cap up. As you guys can see, the Celestia token, TIA, is sitting at $2.33, and it just launched, like I said, a couple days ago, and there is a $2.3 billion market cap with, I guess, a current volume of $300 million. This is huge.
That is quite big. I wonder how much of that is market making, though.
It's a good point, and it looks like they're trading already on Kraken, which is huge. I think. Yeah, Binance. And Kraken's very difficult to list on. There's a lot of, they I think might be the most regulatorily compliant exchange, if not Coinbase. So that's impressive already.
Yeah, I think Coinbase and Kraken are the top two, but Kraken doesn't list that many tokens as far as I know, like only a small handful.
For sure. And you could see, like, I guess the airdrop campaign already kicked off, but looks like the TIA token price is doing quite good, which means that maybe not a lot of people are dumping, or there's a lot of hype and people are buying in. But I want to take the focus back over to the airdrop. So this is a link you shared with me earlier from airdrops.io. And so, obviously, when a new blockchain launches, they need to demonstrate traction. They need to demonstrate they have a large user base. And one of the ways that blockchains will do that is through airdrop campaigns. They'll send tokens or coins to a number of individuals to give them a little something to operate on the blockchain with. And so, Carmelo, I think you told me before that they're targeting the top 50% of active users on the top 10 Ethereum rollups by TVL, with a balance of at least $50 based on a snapshot taken on January 1st of the beginning of this year. And looks like they're airdropping 60 million of their own TIA tokens. That's a lot.
Yeah, and like whenever I see the terms for these airdrops, they look completely arbitrary, like January 1st, 2023. Who knows? I have no idea what I had in whatever wallets I have on that date. So I actually did go check out earlier before the deadline if I got any tokens, and I think a few of my wallets did, but it can't be a large amount because 50% of all active users with $50 or more, That's a lot of people you got to airdrop tokens to. So I was kind of, it's an astoundingly high number, and I can't imagine how many tokens they're actually giving away in value. I mean, 60 million tokens apparently, and $2 a pop. So that's $120 million.
Yeah, I
At
mean,
least,
I
right?
think that's like close to 130, $140 million worth of token at this current price. And so this is, this is always interesting to see, like how is a team creating metrics to target users for an airdrop campaign? Because airdrops, like there are so many people that will farm airdrops. Like they make livings out of just like, keeping up to date with what airdrops are happening. And how do they make a living doing that? Well, they collect airdrop assets and then they dump them and they sell them, right? So people will like look at this criteria and they'll try to adhere to some of this criteria to be eligible to get airdrop tokens so they can later sell them. And depending on how you structure these, you might be able to exclude those farmers and try and target people that are most likely to use your network. And so like, let's dive a little bit deeper into some of this. So 50% of active users on the top 10 Ethereum rollups, like active, what does that mean? One transaction since January 1st, and then a balance of at least $50. I know a lot of people that have like, 12, 24 different wallets with more than a balance of $50 on those wallets that they use them for different purposes. And so automatically you might have one individual who, can be considered a user on the Celestia network that would take up a spot for potentially 12 to 24 different airdrop wallets. So like, it's not the most effective thing. And to be honest, targeting active users on other networks does not guarantee they'll come on board and use your network.
That's the thing. Like, I don't think you can farm this or take advantage of it too easily because you can't fake volume. So if you use your wallets a lot, like I think only a handful of my wallets were at like they passed that threshold of activity, because a lot of my wallets, they just hold money. I don't use them to transact often. I don't trade with them. I don't use them. So people that are traders and using all their wallets, yeah, they're probably eligible on all of them. But most people, they're not going to be eligible for all of these. So, and not to mention that by the time people are interested and aware of it, that snapshot's already taken place. So I don't think you can farm it. But like you said, the downside to this is it's such a catch-all. It doesn't really target, it doesn't do a good job targeting people that might actually be interested in Celestia as a network to use it. It is probably almost as good as you can do. I haven't seen many other targeted approaches that are better than this, unfortunately, but it's something that I think we could do quite well, and I would love to take on that challenge at some point, like to design the best airdrop campaign ever to actually target people that would use it, because it sounds like a fun
Yeah,
challenge to me.
100%. And this is like really at the root of business intelligence, and using data to try and understand like how you can create a more effective campaign, specifically in this case around airdrops. And so like, obviously it takes a little bit more effort and work, but all of the data is there and available for you. And so creating some criteria, it sounds like this criteria came out like, way after the snapshot, right? The snapshot was nearly a year ago. But, being able to, let's say, pull an entire list of Ethereum active wallets and then understand, did the activity drop in those wallets when those individuals transferred funds or assets to other rollups or EVMs? That might be a good target to try and figure out like, okay, this person is actively trying to shift their activity from Ethereum to other EVMs or layer 2s or scaling solutions. That's a great target user. And so like, I think, this is something that we see in airdrop campaigns all the time. People kind of dropping the ball and not thinking creatively enough about how they can leverage their data to target new users. But I've got the website up here, and I guess we can learn a little bit more about Celestia to see if it would be something that we'd be interested in investing in. So when it comes to like, a new blockchain to compete with Ethereum, we want to look at like the throughput, the innovation of the consensus mechanism, and traction, right?
Yeah. So one thing that strikes my attention, no, that's not the right phrase, but comes to my attention is the light nodes. So I think they're putting a focus on two different types of nodes, so that you have your main nodes that actually hold records of the ledger, and then you have light nodes, which don't need to hold all of that information, but they do participate in validation in the network. And then the most interesting thing on this page that I've seen so far is the first modular network, which I am not 100% sure that's accurate, because I think Ethereum technically qualifies as a modular network with layer 2s designed as like different modular networks within that ecosystem. But I think what they're trying to say is that it's the first actual launched blockchain that allows people to build their own private blockchains in bespoke networks on their main blockchain. So you have different ecosystems that grow and become part of it, which is really interesting. But one of the inherent risks of modular blockchains are the scalability and the security all being on the same layer. So it's a lot harder to keep these moving parts working in unison. That's why I think nobody's really tried to tackle it so far, but good on them. Like, I think it's a really cool use case for this technology, and I'm definitely going to follow what they're doing closely in the future, because if they're truly the first modular blockchain, like, it's a big use case, and I want to see if they sink or
That's
swim.
a really good point. And like you made an excellent observation around like the security aspect. The more moving parts you have in more like innovative technologies in Web3, then the more points of vulnerability you have for an attack, for any sort of like security issue. And so this is like a huge thing to keep in mind. And again, I would challenge our users to understand like what are some important metrics around the traction or the activity on a new blockchain, using the token price or the coin price as a metric to see if the project is doing well is never really that good of an idea. But I've got this up here, which linked me from CoinMarketCap, which is the Celestia scan. So looking at the activity here is going to give you a much better idea of how much traction or how much popularity this new network is getting. And comparing that to, like, let's say Arbitrum or Sui, understanding, oh, there's 10 minutes.
No.
Stupid clock interrupted me. But yeah, like the point I wanted to make is like trying to understand this data, because this is the real activity. This is what's happening on the ground. You can see here close to 250,000 transactions in, I think, one day. 3,800 total blocks. Gas price 0.268. I think, is that compared to the actual token price? If so, that would be like 50 cents maybe. But yeah, this is going to help you understand, like, trends in the activity is going to help you understand if people are really caring enough to use this network. And how does that compare to Sui or Arbitrum or some of these other scaling solutions or competitor blockchains? And also, what did the price history do there? Like, did they gain enough attention for people to buy in? And that's going to be one of the main factors in understanding if Celestia and their native token is going to be a good investment.
Yeah, absolutely. So I guess before we dive in, I got to remind the viewers, if this has been helpful or interesting for you, please, it's tremendously helpful if you give us a like, comment, let us know what we're wrong about, or help fill us in on what we're missing. And if you really like our content, maybe subscribe. That's up to you. And yeah, without further ado, I guess I'll yield the floor to you, good sir. What do you think about Celestia? Would you invest in this token as an investment? Speculative investment?
I like the idea of modular blockchain. I like the idea of light nodes, as you mentioned. We need to create some more accessibility around these layer 1 networks, and hopefully the night load or the light node sounds pretty cool. Light node infrastructure allows a greater degree of decentralization for the consensus of this blockchain. So I'm a big fan of that. The security risks around a modular blockchain, obviously, that's a big issue. But I think it's interesting enough to see or to dive a little bit deeper into the documents, into the white paper. I know with layer 1 networks, white papers are usually very technical. They kind of look like technical journal articles that outline a lot of the architecture for how the consensus mechanism works, etc. I think this one's proof of stake as well. So I'm definitely eager to learn a little bit more about Celestia and see what kind of activity is going to happen on this network, what kind of dApps are people going to build, and what kind of problems does it solve that Ethereum and the other scaling solutions in L2s and EVM compatible networks are not already solving or failing to solve, because there's so many of them. And it seems like they're all competing in an attention economy right now. Like, they all claim to solve the same issue, but there's just not enough users and activity to go around. And so it's kind of a game of like favorites. So I think I definitely want to dive a little bit deeper. I'd give it 1 thumb up.
Yeah, I mean, I tend to agree. I think this is one of the more interesting ones we've looked at in a long time. And the beauty here is that you could look exactly into their go-to-market strategy and their target demographic. Like, they tell you with their airdrop campaign, they're looking to poach as many people away from Ethereum and its layer 2s as possible. And you're not going to really peel people away from Ethereum. I think if people like me they've made it up in their minds that Ethereum is as close to the perfect network as possible. Like, obviously it has its own issues with gas prices and how slow it is and how costly it is to run applications and use it. But I don't know. I think they want to steal all this attention from these layer 2s like Arbitrum and Optimism and ZK Sync when that launches. So they're trying to get in while they can, because it is another alternative to Ethereum's structure with layer 1s and layer 2s. So I understand it from that point, but and I think we didn't really have enough time to validate, but I think the token is obviously used for gas, but more importantly, it's used to rent like blob space. So to run applications, to build your own networks, you're going to have to stake and you're going to have to pay with the token to rent that space. So it's kind of like a toll on a highway to use the road. So it's like a public good. You have to rent it to run your own blockchain network. So it's an interesting, as opposed to like Polkadot, let's say, which has its own kind of modular structure. I don't know if it qualifies as modular, but it's a similar idea that you can rent your own space to launch your own blockchain that's customized to your needs. So like you said, I think this is necessary, and I think it's really interesting. I think, I hate to say it, but the token might be an actual good investment based off of users. Like, I would have to keep an eye on how many people are looking to use this network. If people really bullish on using it to build their own like bespoke customized networks, then the sky's the limit. But I think if we had more time, one thing I definitely want to look into is who they've got on board to build in their network, because you and I have both seen our fair share of impressive networks with great throughput, amazing scalability, amazing security, but they just can't, for whatever reason, find people to build in their network. And short of paying them a grant or giving them a whole bunch of money, there's not a whole lot of good ways to get people to build in your ecosystem. It's something that we haven't figured out as an industry yet. So that's my main concern here with Celestia, which is a good problem to have, but it's still a little bit worrying. But that's what I would look to if I had more time.
That's a great point. It's challenging out there. It's hard being a layer 1. You got to fight for your dinner.
Especially now, there's so. I can't, remember the good old days when there used to be like 10 blockchains.
The good old days.
I remember there used to be like 3 blockchains, and now there's God knows how many thousands.
There's a lot, and so this is the blockchain wars we're in now. But we'll see what happens. Well, that's all we got for today. Our 10 minutes is up. Our verdict is out. Again, make sure you tap that like button if you guys enjoy this content. Be sure to reach out and maybe suggest a project that you think we should dive into, maybe something that interests you. And, throw us a follow if you want to see more content like this, because we'll be back next week for another 10-minute eye test. Sasha and Carmelo signing off. Thanks again, y'all. Ciao.
Bye, everybody.